Bitcoin is back up above 27,000. We had some turbulence before because of questions about the U.S. debt ceiling in the negotiations. Of course, that seems to be progressing, but nonetheless, it had an effect on crypto. So joining us now to discuss is Tactive Wealth advisor Eddy Gifford. Welcome, Eddy.
Thank you for having me, guys.
Glad to see you. So you see we had this drop in Bitcoin below 27,000, of course, but you don't think it's necessarily because of these negotiations between Congress and the president, but might have something to do with what's going on at Binance. That Binance paused withdrawals on Bitcoin earlier this month. Can you fill us in on that?
Yeah, I think there's a lot of drivers to volatility in general right now. I think it started a couple of weeks ago when we had the pauses on Binance, and it just shows that when there's a lack of liquidity, things can get really bad really fast. And that's not exclusive to Bitcoin. That's any type of risk asset in general. So, the fact that happened, and then we've got the debt ceiling on our hands, and then we have interest rates that seem to be probably staying elevated for longer than anyone wants to admit, means that we probably have more volatility in store. Now volatility is not a bad thing. The nice thing about volatility is when things go like this, it gives us an opportunity to buy. It gives us an opportunity to get in at a lower share price, potentially. It gives us an opportunity to trade. So there's a lot of opportunity here, but I think that, generally speaking, it's not without a ton of volatility because there is still so many things that are unknown.
I'm looking at the Fed Funds Futures tool on the CME website, and they're showing that the market expects rates to go down, certainly by the end of the year, definitely next year. Of course, the Fed does what it does, and maybe the markets will change its mind as data keeps coming in. But do you think that the crypto markets are paying attention at all to what the traditional markets, the traditional bond markets are saying is going to happen, which is that we might see more liquidity in a few months' time? So get ready, boys. Why don't you just all buy Bitcoin now? Why is that not happening?
Well, I think it's one of those things where we just have like these polarizing views occurring right now. We've got the bond market telling us, hey, blinking light, recession coming. We're in a situation where liquidity is coming back. But then we have the inflation story on the other side, and the core inflation, which is super, super sticky, that's just not budging. And so, if Powell has said anything over the last 18 months repeatedly, it's that inflation is his number one priority, period. So if inflation continues to remain sticky, he's going to push us into a deeper recession than anyone wants to admit, just to get rid of the inflation, and then they'll cut. It's not whether or not they're going to cut in the future. We know that that's essentially the only tool that they have, is to raise rates and lower rates to try to spur demand on either side. So that's why we like the idea of any risk asset. But the nice thing about Bitcoin is that it's finite in number. When you look at the dollar as an example, we're sitting here fighting to raise the debt ceiling, which is trillions of dollars, and that doesn't even include unpaid liabilities for Social Security and Medicare. And so that devaluation is going to continue to occur over time with the dollar and with any currency where we have kind of this unlimited borrowing. And at least in Bitcoin land, right, there's a finite number. We have a halving event that's occurring next year. And when it comes to mining, there's only so much energy out there, right? So you can only mine so much. And so that kind of keeps at least supply in check, which gives you more long-term upside potential, whether you're using it as a medium in exchange, or whether you're using it as a hedge, or whether you're using it as a core of a piece of your portfolio.
Well, those struggling miners would be happy to hear about that.
Yeah, definitely. We think that there's opportunity in the mining space more so now than there were a couple years ago, just because costs have fallen so much on equipment and those types of things. And from the standpoint of widespread adoption, clients are asking me that question more and more. Hey, what about Bitcoin? What about Bitcoin? And Bitcoin is obviously the entry to the rest of cryptocurrencies. And so that's going to be kind of the start. But if we can see widespread adoption over the next 3 to 5 years, we can see, some big home runs for investors that are getting in now.
Lastly, you've said that the tightening by the Fed is reducing liquidity in markets. We've talked a little bit about what that could mean for Bitcoin. Is this different for altcoins? We're seeing a lot of altcoins pop up in the news.
Well, altcoins are more of a spec investment, so generally speaking, right? So I think that, it's kind of crazy that you can start a coin and then it can be up like 1,000% 2 weeks later. We've obviously seen that last year in the stock market land from the standpoint of all like the meme stocks and everything that was occurring there. So, when I'm dealing with clients, we're looking more big picture. We're not really like looking into like the spec side of things. And so, we're leaning on level 1 and level 2. We're not jumping into a lot of the altcoins. Now, the reality though is that I think that the elevated interest rates, if they stay there, definitely do have an impact on who's putting money into altcoins for whatever reason, just because you can get a much higher interest rate backed by the US government. So there's that from like a risk-taking standpoint. And if liquidity does continue to tighten and if they keep the rates elevated and we do see more banks get into trouble, that's not going to be good for any risk asset, especially cryptocurrency, unfortunately.
Eddy, thank you for joining us this morning. That was Tactive Wealth advisor Eddy Gifford.